Yeah.
But the principles still apply. And again, when you think about this, he's under 10 years old, understanding and learning, okay, I can buy and sell things. I have a model in my parents or my grandparents as a business owner.
Yeah.
I understand I'm not being brought around politics. And I'm also learning about compound interest, and he's developing all of this time with looking at data, looking at numbers, and understanding how these patterns operate.
Hey, we on right now.
We are on?
Yeah, we are on with another Founders Drive.
And we back, baby. What's up?
It's just my jingle now.
All right. So today
We're cranking them out.
Yeah, we have to crank it up. We got a short one today, but it's still going to be good. This is going to be a two-parter.
Yes.
Because we are covering the career of Warren Buffett.
Yeah.
One of the most famous names, if not the most famous name in investing.
Yeah, probably the most famous name.
Yeah, I mean, he's synonymous with trading stocks, and his story is pretty interesting. It's one that starts really early.
Yes.
But it has, and obviously lasted a very, very long time. But there's so much to learn from his career. We covered Charlie Munger earlier.
We did. A lot of crossover here.
A lot of crossover. But this is going to be a two-parter. Again, we have kind of pretty busy day going on today, but also there's just so much to dig in terms of his philosophies, his trades, and how he's just conducted himself over the course of his life, and what really drives him, what drives this founder. Although he didn't found the company that we're going to be talking about, he acquired it,
which actually is something we're seeing a lot more happen now as people get older in age and they start to not lose the business, but get out of the business.
Yeah.
There are a lot of people that are acquiring businesses and then running them as their own.
Yeah, a lot of the baby boomers don't have anybody in their immediate family that want to take over the businesses. And so they're like, hey, I want to keep this thing going. How can I put this in the hands of somebody who likes businesses, is going to treat it right, grow it, and take it to the other level? So,
and in those cases, most of the time it's a very good business that's cash flow positive and it's doing well, so you can actually get some money for it.
Yeah.
With Warren, he's looking at businesses that are specifically undervalued.
Yeah. And Berkshire Hathaway was one of those, but what they did to it was incredible.
Legendary.
To another level.
Yeah.
But like we usually do on our Founders Drives, let's start in his beginnings. And I think this is one thing that a lot of people don't really understand.
What's that?
Is how he's always had this mind for business and money. And of course, he was raised in a situation where he was very fortunate and very blessed.
Right.
He grew up in the household of a stockbroker who eventually became a U.S. congressman during the Depression. And so not only, it's a time where people are more scrupulous, people are more penny pinching, and they're not necessarily living in lavish times, but he had the protection of somebody who understood markets and also was involved with politics and business. And as we know from so many of the representatives today, there seems to be an undeniable relationship between politics and business.
Yes.
You could actually track a lot of these politicians' portfolios, and they seem to be very, very aligned with the better performing stocks.
That's true.
I wonder why. Was it the chicken or was it the egg? But yeah, he started pretty early, and his dad was a stockbroker. He got exposure to how these markets work. And again, this is before Robinhood. This is before Fidelity. This is before apps on the phones. And
this is when people doing it on paper.
Exactly.
You know
and
what
on top of that, it was before when people had fractional shares, which is something that's so commonplace today. You can go and buy a percentage of a stock.
Yeah, it's standard now.
But before, you had to buy a full share of a stock. But even then, going back to that time, he was exposed pretty early. And really early on, I think when he was 6, he just took a very strong liking to numbers and statistics. His mother wasn't the most emotionally stable woman, and he used to often lash out at the kids. His older sister used to say, our mother wasn't happy until we were crying.
Right.
Which is not the best environment to grow up in, but it put him in a situation where he was moved and became more introverted and started examining these numbers and fell in love with the patterns that he saw between numbers. And that was something that set the foundation for the rest of his life.
Yeah. Something else to call out in an early age, which I feel like is a common thing with Paul Graham, with Zuckerberg, with Gates. At the age of 13, and I know this is like after some of his small business ventures.
Yeah.
At 13, he files his first ever tax return.
Yeah. He filed his tax return. So he's on Omaha. He was born in Nebraska.
Yes.
Just like my man over here. Yup. These guys are linked. It's that Omaha juice. I don't know what they're putting in the water over there, but
we're not going to tell you.
It's a secret. That's why he's not leaving. And it's funny because when he filed his first tax return, he was in D.C. and then. But when he first moved there, he was like, I want to go back to Omaha. So he didn't settle right away.
Right.
So he snuck off at one point and went back to Omaha to try and to live there. But he eventually got acquainted in D.C. where he had a paper route.
Yes.
With the Washington Post, and he now owns the Washington Post, I believe, or is that Bezos? Or I think he had shares at some point.
He had shares, yeah. I think it's Bezos that owns, or Washington Times, I think.
Yeah. So he used to deliver it. He was making $175 a week, I believe, which is more than the average person at the time.
More than his teachers.
Yeah.
That he was in class with.
Right. And so he was earning well. He put his work in. He had a morning route and an afternoon route, and he was just very scrupulous with his money, and just was very just knew how to put his money to work and lever it. And even before then, though, when he was 6, he began selling Wrigley's gum. His father, and I think Charlie Munger worked for his father and then moved to LA, and then they ended up getting acquainted after when they were adults. But Warren Buffett's grandfather owned a
general
convenience store type thing, yeah. And so he would buy packs of gum there, flip the packs of gum when he was 6, but then he would also sell individual sticks for more. And so he understood that whole dynamic there.
Which, same as cigarette sales became illegal very quickly.
Yeah, he sold these loosies, right?
Exactly.
He's like, you want some loosies?
I think he was under 10 at that point.
He was 6.
It was crazy early on that he is being an entrepreneur, which you can see in some people today. I mean, there's that one guy who's like 14 or 15 who just launched their own design site. There are entrepreneurs at this level, right? It's very rare, but there are people that are coming out with products at that 13, 14-year-old.
Something with him that I don't know if there's any documentation around this, but he obviously was buying the packs of gum from his grandfather who had a store open, and then he was going and selling it door to door.
Yeah.
I'm wondering if they encouraged it or not, or if they were like, if it was nurtured, if he came up with the idea, or if they said, hey, Warren, this might be a good idea to make money, because
that's a good question. Like, would you nurture it in your kid?
I mean, absolutely.
You would? You'd say, I own a store, go sell shit back door to door?
Yeah, because it's like you're teaching that skill, but it goes back to the Zuckerberg, where they said, oh, we're going to enable you more.
Get you a tutor, get you these classes, do things where you're going to be but
you're setting your kid up for success because you're teaching him, oh, when I sell something, I can get something in return.
I think it also is like a little bit of a nostalgia for me, where it's like, I would be comfortable letting a 6-year-old knock on doors today.
Yeah.
But back in like the 30s and 40s, you probably would be okay with that.
Yeah.
So it's very interesting.
Yeah. And even if I'm gonna go with my kid to go in, sell here and there,
knock on a door, shake a hand, meet a friend.
But what's really interesting, so a couple months ago, I was out to dinner, and this kid came up and took a picture.
Okay.
And said it was a Polaroid picture, and he gave it to me and my girlfriend. And he said, hey, you can have it. And I was like, oh, this is so awesome. Thank you so much.
For free?
And I was going to give him some cash.
Oh, okay.
His mom came in between us and said, no, I just want him to love taking pictures.
Oh, that's
But in my mind, of course I respected her wishes.
Yeah.
But in my mind, I was like,
you don't.
Well, I was like, because I've done photography for a while.
You're stopping the dopamine where it's like you get paid for your work.
Right. Well, and just knowing that that's a thing, because when I've done photography and I know that a lot of people undervalue how much work goes into that.
True.
And I don't personally necessarily see it as something that would get in the way of him having passion for what he's doing. I think it's one of those things where you're saying it's like dopamine hit, but it's also a positive reinforcement, like, hey, there are people that value what you're doing.
Oh yeah.
And I think that this is really cool. Now, moms might have had a different encounterment, but I'm also like, how many people get in the way of learning how to even start a business around something you're passionate about? Like, to me, that's something where it's now being trained that I shouldn't be able to receive money for things that I love doing.
That pattern starts to develop.
Right?
Yeah.
Whereas if you get $1 from it, it's like, oh, I might not get it from everybody, but it's something where it's like, I can make a living out of doing something that I really enjoy doing. I mean, the kid was like 5, 6, and I'm like, that's so dope that he's walking around and he's just likes engaging with people, taking pictures. And to me, that's a version of a Warren Buffett, but it was nurtured in his case, where they were like, I'm assuming they were like, hey, we can get you, these packs of gum. This is what you can do to go make money, just like your grandfather who started a whole store. And again, it's just something that you see nurtured in Warren Buffett, where he loved numbers, he loved business, and he loved starting businesses. And it seems like it was always encouraged. They like to say that it was just,
he's the oracle,
like it just came out, right? The oracle. But there is something where I'm like, Yeah,
it's definitely helped with his circumstances.
Yeah. So age 7, he borrowed 1,000 ways to make $1,000 from the Omaha Public Library, and this ignited his obsession with compound interest. Now we're gonna go deeper into compound interest, but he calls it there's how many wonders of the world are there?
7.
He's the 8th wonder of the world.
Yeah.
Just the way that compound interest works. It's the same principles that we see in tech, where you start to see the exponential growth.
Yeah.
But the principles still apply. And again, when you think about this, he's under 10 years old, understanding and learning, okay, I can buy and sell things. I have a model in my parents my grandparents as a business owner.
Yeah.
I understand I'm not being brought around politics. And I'm also learning about compound interest, and he's developing all of this time with looking at data, looking at numbers, and understanding how these patterns operate.
Yeah, it's kind of wild. I mean, I think there's some people, even like today, I see people like Gary Vee say, even like to a 20-year-old, you're still a kid, go be a kid. You know what I mean? And it's very interesting. I think most people, when they were 6, 7, or even 13, wouldn't have done the things Warren did, even if they were forced to.
Yeah.
Like, even if you had somebody that was a hedge fund manager as a parent or a guardian, and they were like, I'll show you how to do all these things. I think most kids would be like, no, I'm not going to do that, because they don't have the passion for it. They don't have that calling, or whatever it is that had Warren actually go out and do that thing for himself at such a young age, which is remarkable.
Yeah, of course. So he so around there, he also sold Coca-Cola bottles, like packs, and then he would sell the individuals for 26 or 25 cents. So he really just understood wholesale. Buying and then selling on
the individual
for a markup at a pretty young age. And I think that's, again, you're in that environment. You go to grandpa's store and you see him doing that. If you're one of the kids that become interested, that's something that you could lean into.
Yeah.
But then he also sold horse racing tip sheets, stable boy selections. His father at 10 took him to the New York Stock Exchange, and that was a formative experience.
Yeah.
And I'm like sitting back and just visualizing what that would look like as a 10-year-old. Like,
it's
oh
wild.
My God.
I don't think I would understand it at 10.
Yeah, but I mean,
I wouldn't have had the
and Dad is also a stockbroker, so he kind of probably broke things down, and his mind was also tuned to that.
Right.
But then we go around age 11, where he bought his first stock, and he bought 3 shares of City Service Preferred at $38 per share. He bought 3 for himself, 3 for his sister.
Yep.
And then it went down to $27. He held. It went back up to $40. He was a little freaked out, so he sold it.
Yep.
And then it went up to $202
overnight.
And then he learned, I need to hold a valuable stock when I have it, and not be patient, and not be too sensitive to the price fluctuations. Which again forms the mentality of how he conducts business down the road, which we're going to get into in a little bit here.
Yes, and I think it forms that idea of, like, if I'm a businessman buying businesses, there's no really like earthly factors that are going to play into it. Like, he talks about this later in life, where he's like, I'm not going to care if it's a Sunday, or if it's an election year, or if it's a holiday. If it's a good deal, it's a good deal.
It's a good deal. It's a good deal. And if the business is looking good, the business is looking good.
Yeah.
So it's something that it formed his. You see this after the fact. And hindsight is always 20/20, but it does lay the foundation for how he approaches business from such an early age.
And you can see like him trying and failing and then learning, and then not making that mistake again.
Yep, it's like, yeah, I'm not gonna miss out on that again. Yeah. Imagine being 11 years old and being like, man, look at how much money I left on the table.
I can't imagine that. I see 11-year-olds now that can't even form complete sentences.
Just exasperated about
you know what I mean?
Yeah, I mean, particularly today.
It's wild.
Yeah. So around 10, he said, hey, I'm going to be a millionaire by 30. And then he later said, if not, I'm going to jump off the tallest building in Omaha. It's like, all right. But yeah, I mean, like, he learned a lot of these lessons pretty early. And I think it's extremely indicative of how his future was going to pan out. So when he was 12, they moved to D.C., which we talked about a little bit there. He was miserable, loved Omaha. And there's these patterns of him going back to Omaha. Yeah. Omaha was just calling him. But there he delivered both the Washington Times and the Washington Post, and he developed an efficient system to deliver to multiple apartments, and this is where he really started to stack. He made $175 by the age of 15. Yeah. Right before then, 1944, when he was 14, he had an income of $592 and paid $7 in taxes. He claimed his bicycle as a $35 tax reduction.
I mean, I guess like it's probably smart, right, to do that taxes at a young age. But like from my experience, it's like you're a kid. Yeah. Take the money and do whatever you want with it. Like, don't worry about the government coming in to like take taxes from you.
But it's interesting too, because it's like, do whatever you want with it. It seems like that's what he wanted to do with it.
Yeah, I also think like it doesn't sound like a lot of money today, but back then, like that was more money like than his adults in his life were making.
Yeah, because it's the 40s.
Exactly. Yeah. So I think that's another thing too, where like
in depression times and war times.
Yeah. So like you're making money at that point, and you're so young. I guess at that point there is probably a need. Like if I was making $100,000 at 14 today, the government probably wants their cut. And so I guess that makes sense. It's just a wild thought where you have like a 13 or 14-year-old filing their taxes.
Yeah. So his next venture was buying pinball machines.
Yeah.
And he bought a $25 pinball machine. He recruited his friend Don Danley to repair it, and then together they created Wilson Coin Operated Machine Company. And this was just a fictional name at the time. And they went to the barber shop to go negotiate with the owner there, Frank Errico. And they went to Frank Errico and they said, hey, we have this pinball machine. We're selling it on behalf of Mr. Wilson, and we love to make a deal. This is what it would cost to put it in your spot, et cetera, et cetera. Mr. Errico says, hey, I like what Mr. Wilson's doing. I want to encourage this business. And they ended up making $4 on their first week of sale, or first week there. Yeah. Now the thing that they left out is that Mr. Wilson didn't exist.
Yeah, right.
And they just told this story to add credibility to their name when they went out here.
Because they're so young.
Yeah.
I think the other thing that was really cool around this business venture is the fact that Warren would continually call the barbershop and the owners partners. Hey, we're going to go meet with our partners.
Yeah.
And giving them then that sense of accountability and ownership around the products that he was putting in their stores.
Yeah.
Actually, he said saw a increase of the shop owners taking care of the machines, making sure that it was clean, that like it would operate, and that like the space around it was good. And that actually reduced his cost to come in maintenance on the machine. And so by introducing this, concept of like, no, we're partners in this.
Yeah.
Even though he's really selling them.
Yeah.
Helped him down the road, because it was like, okay, now we have a relationship here that we can leverage. Yeah. Very interesting.
Yeah, it's like a mutually invested relationship.
Yeah.
It goes both ways, and we're both here to maintain it and benefit from it.
Yes, I'm not just here to raid out whatever I can take from you. You know.
Yeah, that's a very astute observation, and I think there's a lot that again we see between him over his career, but especially when Charlie Munger's a little bit more verbal about this. But they are very observant of people, and they talk about the psychology of people and how much that actually goes into the success of a business.
100%.
Yeah. So going through there, they ended up within months. They owned machines in 3 barbershops, each earning $50 per week. They sold this eventually for $1,200. Yeah. And Warren Buffett later said this was the best business I was ever in. So the $1,200 was about...
it's a lot of money.
It's about $22,000 in the equivalent to today with what we have. And so...
Yeah.
Oh, and shoot, that was I think a little bit earlier. I think my time is a little bit off here, but he also, when he was a teenager, ended up taking the proceeds from his pinball business and buying 40 acres of land back in Nebraska, just because he needed to, stay connected to Nebraska.
Yeah, it's a lot of land too.
Yeah,
I wish I could buy 40 acres.
And then he hired a tenant farmer to cultivate the land while he was still in DC. And that was his first real estate asset. And it was an income producing property.
Which is wild. I mean, you're not even 20 years old.
Yeah.
And you're like, yeah, I'm in the real estate game. I'm a real estate mogul.
Yeah, we're over here and we're, cultivating this land. It's an asset. We're making money off of it. I have my pinball machine. He had multiple businesses early on. And so it's another thing too is he essentially in his teenagers, he was a serial entrepreneur.
Yeah.
And then, well, even before then, right? A serial entrepreneur.
Pre-teens.
Right? And then like single digits, like a serial entrepreneur. And then when he got older, he then got into the whole investment aspect of it and buying and selling and acquiring different businesses.
He was a serial entrepreneur before he could eat cereal. You know what I mean?
Ain't that a fact, right? Yes, facts. So he attended Woodrow Wilson High School. And he was active in student activities, but of course he was already making more money than the teachers there, and he was like, all right, I'm kind of onto this. So by 16, he had run the paper route, accumulated $53,000, filed multiple tax returns, and then he started to move and say, okay, where am I going to school? He enrolled at Wharton School of Business at the University of Pennsylvania at age 17. He felt his professors couldn't teach him anything more than he already knew. Which is something we see in a lot of other founders. Yeah.
Where they're like, I got it.
Yeah, I'm done here. I'm on to the next.
Yeah.
And then he felt so then he transferred after 2 years, dissatisfied. Like, okay, I'm not satisfied with this. Transferred to the University of Nebraska-Lincoln, of course. Mm-hmm. And he graduated in 1950 at age 19 with a Bachelor of Science in Business Administration. And he just went in there, completed his requirements quickly, and was in and out. He applied to Harvard Business School in the spring of 1950 and did not get in.
Right.
He went for the interviews, and he said in about 10 minutes they decided that they didn't.
Which is wild.
They didn't want to do anything with me.
I think it also happens to a lot of people, right? They don't, the greatness isn't there yet.
Yeah.
And so it's really easy to write that off.
Yeah, it's not as evident, or people have preconceived notions. I mean,
true.
You look at somebody and it's like, this guy's from Nebraska. Yeah. I'm not really set on that. I'm in the Ivy League.
We're fighting those stereotypes,
right? That's what I'm saying. And so he said the person sized him up didn't really feel him, and he was devastated. But he realized that was the best thing that could have happened to him, because that caused him to go to Columbia, right, where he eventually met Benjamin Graham. And Benjamin Graham was the one who wrote The Intelligent Investor. And that's part of what made him, go to that school, is he was looking through and he said, oh, this is the guy that wrote Intelligent Investor. And he teaches here. I could go and learn from him directly. Yeah. And so David Dodd was the other person there. And he applied there. He took the classes from Benjamin Graham. And he was his star student. He was the only person that ever got an A+ from Benjamin Graham. And
isn't that wild?
Right.
The only student ever.
Yeah.
Ever.
And
that doesn't seem real. Ever?
But he was one of these guys that was just inquisitive, asking a lot of questions, and really cared about this. I mean, investing was his passion. The numbers were his passion. Yeah. And this is something that set up a relationship where he would eventually go and work for Benjamin Graham, although Benjamin Graham didn't hire him because he wasn't Jewish. Seems a little racist, but
different times too. But yeah, why?
But eventually he was like, hey, I did give him an A+. I'm gonna, take a chance on this guy. Maybe he has some potential in this whole investing thing. So
I love it.
So yeah, Graham was the father of value investing. Again, we're gonna get a little bit more into this in the super secret Founders Drive. And he wrote the foundational text. Well, Dodd and him wrote the foundational text, Security Analysis, on fundamental analysis, where you evaluate a company based off of the fundamentals of how the business is, not just in terms of like their numbers and statements, but then also the surrounding industry, the economy, the management, and basically fundamental. We're just talking about the most important things that contribute to the company's value.
Right.
And before then, people were mostly looking at what the market trends were.
Yeah.
And the concept of intrinsic value wasn't as formalized before them. So he was very much one of these guys where they bought on a margin of safety. His idea, which is slightly different than what we'll find out later when Charlie Munger started to work with Warren Buffett, he was more, hey, yes, people are looking at the intrinsic value. If I look at the intrinsic value, then I can buy on a margin of safety so I don't lose money.
Right.
But then I can also buy undervalued companies and spot when the market is not looking at a company the way it should be, buy it at a discount, and then, of course, hold it long term. And when I do decide to sell, if I do decide to sell, I can sell it at a profit.
Right.
And not lose money.
Yeah. Yeah, I think he also did this for batches of companies too, where he's like, you just will literally never lose money.
Yeah.
Because you're evaluating these companies that are undervalued. Yeah. And so it's just like, for him, it's obvious, but for everybody else, he becomes an oracle. You know what I mean? Like, it's a very interesting, when you hear him talk,
how is he?
He's just like, yeah, it's just simple. What aren't you understanding about this?
Yeah. Well, one of the things with Warren Buffett is, and he talks about this, is it's not that difficult to learn how to invest. Because it's not an intellectual
pursuit. Yeah.
It's more of a temperamental one.
Exactly.
Can you sit and be patient and do nothing when everything is telling you not to do a thing, and just wait and hold?
Yeah.
Most people get the impulse to feel like they have to do something, and they end up making bad moves or unnecessary moves. And that's a big undercurrent for Warren Buffett. Even we saw that, I mean, he's no longer the active
chairman.
Well, he's a chairman, but he's no longer the active CEO there.
Right.
But he, up until recently, he was like, hey, we just don't have a good move right now. And so the move is to sit still and let our, our investments.
Did you ever hear the analogy he used for baseball? We talk a lot about sports on here.
Yeah, go ahead.
He had an analogy from baseball where he's like, if you're playing the game of baseball, you can sit there and you're going to get pitched a bunch of balls, right? And you've only got a couple strikes until you're out of there. Like, you kind of have to make a play. Either he's going to walk you, or you're going to have to swing, and you might strike out. With being a money manager, you're going to get these balls thrown at you. GM at 35, AOL at 15, Google at 25. And you don't have to swing at a single one. You could sit at that plate for 2 years and not swing. Until you find one that's in your pocket with something that that you understand. Then you take a big old swing.
Yeah. And when you swing, you got to swing for the fences.
Yeah, and so, like, it's that, and he's like, the worst part about being a money manager is that you got your clients in the grandstands going, swing, you bum! So it's like, and it's true, right? Like, if he has your money, and he hasn't moved it in 2 years, you might be like, hey, man, can I get a return, or can I get my money back?
Yeah.
But, the smartest people will stay with him and hold it for the swing that he knows he'll be able to, make a grand slam on.
Man, the A shares of Berkshire Hathaway. We haven't even gotten into them. The A shares of Berkshire Hathaway.
800 grand or something?
700 grand. They're probably 800 grand.
I think it's like 800 grand.
700 as of last. Yeah, so 800. I haven't looked at the latest on that. But I mean, you just own one of those shares.
Yeah.
I mean, it's insane. And so, while the couple things to just round this out, and then we'll shift into the super secret.
Yep.
Is he graduated from Columbia in 1951 when he was 21 years old.
Yeah. With
his master's. And then, of course, Benjamin Graham didn't give him the job. And said, hey, man, you're not Jewish enough. And then he took that time to go and teach economics, and I think it was security analysis, at the University of Nebraska.
Yeah. And
when he did that, I mean, he was the youngest person there. Everybody was older than him. But it was one of those things where he was taught investment principles, and all the students were older than him. And then eventually he continued to study Benjamin Graham's practices, and eventually Benjamin Graham came back and offered him a job. Yeah. But just some other things that are really important to highlight that will set up what we talk about in the part 2 of us going into Warren Buffett is while he was studying under Benjamin Graham, this is important here, or while still at Columbia, he discovered that Graham was the chairman of Geico. You know the Gecko commercials, right? That seem all fun, but really it's an insurance business.
It's government insurance.
Yeah, it's government insurance. Government employees insurance company. And he took the train from New York to Washington, D.C. on a Saturday and found the Geico's offices closed. A janitor let him in and directed him to the only person in the building, Lormier Davidson, an executive. And Davidson, impressed by the young student's questions, spent 4 hours teaching Buffett around Geico's business model, the direct-to-consumer insurance model that bypassed insurance agents.
Yep.
Buffett was electrified. He invested roughly half of his net worth into Geico stock, made a 50% return in just 1 year before selling, a decision he would eventually reverse by buying the whole company 45 years later.
Yeah, something around that story too is the executive was so impressed that somebody would show up on a Saturday.
Mm-hmm.
He's like, yeah, I'll give you some time. I'll give you my 4 hours to answer any questions, walk you through our business model, because anybody willing to show up on a Saturday is serious about this stuff.
Yeah,
when you could be sleeping in, when you could be watching cartoons, when you could be doing literally anything else, you're here asking about Geico.
And he's 21 years old. I mean, of
Right.
course, he had his master's and everything, but he's 21 and he's like, or 20 at this point, because it's right before he graduated. And he's like, no, I'm going to go down here and hang out with you, and I want to learn about this business. And he said, I'm like, looked like a 12-year-old. I was just giddy. I was excited. And I think I made an impression on him. And it goes to show how your curiosity, not only is it a tool for you to receive information, but it's also a tool that for you to convey how much interest you have in somebody else's life or circumstance or what they're doing. And, you know, sometimes that can be a little bit nosy, seen as nosy, but other times it can be just a way to connect with people. And
Who are passionate about the same thing.
exactly. So yeah, I think that's a really big thing right there. We could also say that while he was another thing to highlight is while he was this interim period before working with Benjamin Graham full time, he took a Dale Carnegie course in public speaking, and he said that this changed his life. It brought him out of his shyness, but it also taught him how to communicate. And he's one of these people that talk about how and why communication is such an important tool for an executive.
Yes.
And he's one of these guys that hosts these annual shareholder meetings, where he would invite everybody to Omaha. And I think part of that is due to the idea that he just values communication at such a high,
and to the point where he doesn't
level.
take credit for it. Like he had this whole thing where he was ghostwriting a column in the newspaper for years, telling people and explaining things to, you know, who reads the newspaper, the housewife, you know, the families. It's like, if you can't explain it to them, you don't really know what you're talking about.
Exactly.
And so being able to teach is another way to sharpen your communication skills.
This is huge. I mean, them just being teachers right now, I was listening to somebody talking about why they had such a good reputation for such a long time.
Yeah.
I mean, we're going to get into reputation in the second episode, because that's something that he's like, guard with your life.
Yeah, he's one of the most favorably looked at billionaires in the world right now.
Yeah. And I think a big part of it is he just values teaching. This is the thing that I heard, is that he's always giving information and teaching people, hey, this is how I'm doing it. I'm not going to try and make it seem like it's mystical or woo-woo or anything. There's a very practical way. Now, if you want to accept that or not, that's on you. And most people don't. Even today, we see that a lot. Fundamental analysis is gone. Value investing is gone. It's like, that to me is the dumbest thing I've ever heard in my life. Like, taking from Charlie Munger's standpoint, it's like, you have to be an idiot to believe that fundamental analysis of a company that you're about to buy is irrelevant, and only looking at just the trends is, in fact, fundamental analysis incorporates trend data, because you're trying to find out the most important indicators of whether or not this company is valuable. But again, that's something that we can save for this.
We're definitely going to save for the super secret, because I'm also curious on your take on AI hype and how that plays into the, you know, fundamental value equations. But
so just kind of bringing this home. So one thing with when he was working there with Benjamin Graham finally offered him the job. It started at $12,000 per year. He worked alongside Walter Schloss, another future investing legend, in a spare room. His job was manually computing the liquidation value of companies, filling out forms for Graham to make investment decisions. He learned value investing firsthand, the rigorous mathematical approach to stock selection. Graham was insisted on a wide margin of safety, buying companies trading below their liquidation value. This is cigar butt investing. And basically that's like, picking up discarded cigars and cigarettes for one last free puff. That's kind of was his mentality about it. Graham and Newman generated an average of annual returns of 17% over its 20-year history. And then in 1956, when Warren Buffett was about 25, 26, Benjamin Graham retired, closed Graham and Newman in 1956. Buffett was about 25. He had accumulated about $174,000, so probably over $1 million
today. Yeah.
And could have stayed in New York and worked for any firm on Wall Street, but instead he returned back to Omaha. And of course, I mean, the guy loves Omaha. Stuck off there, went back to school there. But yeah, and that's where he's been for, you know,
the next 70 years.
Yeah.
I think that's like a good spot to pick up on in part 2, where he does start that return to Omaha and then build out his entire castle.
Yeah.
His foundation of how he then acquires all these other companies, his whole entire run with Berkshire, and all that stuff that we'll cover in part 2.
Cool.
Anything else you wanted to say for part 1?
No, man. I think that was a kind of a cool little. I've never really seen somebody just like, you know, cover his origin story like that. In the early beginning. So. And
we're gonna do a little bit more of that in this week's Super Secret.
Yeah.
So check that out on Constance.
Yes.
And we'll see you next week.
Yes. Constance.com/foundersdrive. Constance.com/foundersdrive.
In the link in the description, and we'll see you next week with a part 2 on Warren Buffett. Peace.